Hello and welcome back to my channel once again. In this video, I'll be giving 5 important tips on how to play it safe when you are investing in high growth stocks. So, the reason why I'm doing this is this. I feel for those of us that are providing this sort of content, educational videos on investing, especially in the super volatile space of high growth stock, and it is almost a duty of care for those of us providing this sort of making this sort of content on YouTube to provide this sort of advice, because a lot of people watching our content actually make some of their decisions, at least based on what they see here. So I'm doing this to sort of encourage everyone to be responsible in the way they invest, to be responsible in the way they interpret the content that's been provided here. So it's very important to understand that most of the content being provided on this platform on YouTube and elsewhere, they're not necessarily advice. They're just basically educational content that you should not necessarily interpret as trying to convince you to invest or something. So a lot of this content that's been provided here are just educational content. So they're not financial advice. You do have to do your own research, and it's also important to play it safe even after you've done your own research. So how do you play it safe when you're investing in high growth stock? First and foremost, you don't need to start investing with a lot of money. This is a mistake a lot of people make. I've seen people take out tens of thousands of dollars from their life savings, for example, or even from their superannuation pay, and they've put it in the share market, and they've lost everything. So I can place a bet on this fact. If you're gonna put tens of thousands of your saving in the share market, there's no way you're gonna go on a winning streak. Everyone invests in the share market, you're bound to lose money at some point in time, and it's very likely if you're gonna put this investment, within this period of time, super volatile period of time that we are in, you're more than likely, even based on the research that has been conducted by the financial regulators, you're most likely to see the market moving against you, so such that you're actually entering a position when you think the market is going to move up and the market does the exact opposite, and then you leave a position thinking the market is going to go down, or thinking the share is going to go down, that the share actually goes up. So this is the research that's been found. A lot of first-time investors that are investing on a short-term basis are actually falling trap and falling prey of this situation, and they're losing their money. So the first important advice here is to play it safe by investing just a little bit of money. So instead of investing 10,000, I would say, why don't you start with just $500? If it's a high growth stock, and if you're likely to if you're investing in the right company and you're gonna make good money from the shares you've picked, starting with $500, you could actually sort of multiply your capital, and then whatever you make out of the stock market, you can reinvest that into other shares. So you could actually grow your portfolio by starting small. I know it takes a little bit of time. It's not as quick as you would expect, but when you want to get it quick, that's when you actually are bound to lose money. So always start very small. So I call this a very lean investment strategy. Try to make your capital from the stock market itself. You start with a little bit of capital, because obviously you don't make money without putting money into something. So, but put a little bit of money, and then use the capital that you gain from the market to reinvest elsewhere. That's the principle that I use personally, and I would hope that I'm very soon, in the next couple of months, I will share my portfolio with you guys, to see how I've grown my initial small passive investment, and I've expanded and made it bigger. So that takes me to the next important um, principle, and this is about always, making sure that you are only investing money that you can afford to lose. So if these funds that you're putting into the share market is your life savings, if it's meant for other purposes and you just want to quickly multiply it. Actually, there was a story of a guy, who took out a student loan, which is actually illegal in America, and actually put it in the stock market, and he lost everything. So, I wouldn't be putting my life savings, I wouldn't be taking a loan and putting it in the stock market. That's obviously a silly way to do things. You should only invest money that you can afford to lose. It is a very bad idea to borrow for investment in the share market. And actually, as a matter of fact, a lot of the regulatory authorities, they've actually sort of starting to clamp down on this, borrowing. So I'm actually really glad that margin loans are getting really difficult to get, and there's a lot more regulation in that space, because it's not always a good idea, or I would say it's almost never a good idea to invest margin loans in high growth stock. Personally, I just don't think it's a wise thing to do. So, the third thing is the most hyped stock are not always the best performing stock. I've seen this a lot of time from the research that I've done personally. There are just so many stock out there that they're just hyped by content creators, people on TikTok, for example, on Reddit, on YouTube here. There's a lot of stock. There's just so much hype about them, and these stocks have most of the time I find out that they're actually just when you look at the chart, they're actually just attaining their peak. So they've done a very significant growth over the past few months. Probably they've gained about 1,000%. And then you're hyping them now. Is this the right time to invest in them? No, they've just attained their peak. So we should understand the basic content of overbuying and overselling. A lot of these stocks that have been hyped, content creators actually see them, at the later stage after they've, really done well. They've had a good run, and then they're now pulling back and retreating. This is never the best time to invest. So that's why on this channel I try to make sure that the stock that I'm bringing on board are actually stocks that are just starting to emerge. Stocks that are just starting to have that broad big run, and try as much as possible not to bring in stocks that are just overhyped, or that have just done a really good run and are now starting to pull back, because people are bound to lose money if they invest in that. Obviously, except if you're actually short selling. That's the only way you can make money on those sort of stocks. And then the next one is you should actually definitely understand the fundamentals and keep an eye on the chart all the time. So the fundamentals is what the company is doing, what value is the company providing, what does the future hold for the company. Is the company profitable? What's the cash flow like? What's the financial position of the company like? Is the company able to attain profitability any soon? What's the differentiator? What's the unique proposition that the company has got? What's the prospect for the company? So all of these things, and then the charts, they're also based on historical record of the company. They using all these charts, they're very important as well. The final one, which I've actually not put on here, is day trading. This is a little bit controversial. There's that argument that people have done well doing day trading, but for me, it's just a no. I just don't believe in this. If my principle is value investment. If I'm investing in a company, I just see the value, and I want to be with them on a long-term basis. Day trading just doesn't work. In terms of the money you'll be shelling out on broker's fee, the brokerage, most of the time you just line in the pocket of your broker when you day trade. And the market is so volatile now that it's just not the best time to day trade. The market is more likely to move against you than the other way around. And a lot of people are losing their money in this time period. So as regards day trading, I would definitely say, play it safe, know what you're doing. It's just not for me. I don't encourage it either. And that's about it. Those are the 5 points that I'll be covering today. I'll probably do another series on this video. Thank you for listening, and I hope we all have a safe trading, safe investing. That's really important. Thank you very much for your support, and I hope you can click the like button or subscribe on this channel, for more videos like this. Thank you.